Okay, hi traders, here's a new video. First of all, the risk warning. Your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. So I want to do some more videos about strategies, but I have seen in the Facebook group, and I can recommend you to get the ebook. Yes, the ebook in the description. I'm going to put now, yes, because of the rejection here. Get the ebook, because this video will be extension part of that what I have discussed already in the ebook. Yes, and for this reason, get the ebook, because there is a part which is the primary part, the part 1. But I have seen that there are a lot of people struggling, still struggling with rejection, and they don't understand a proper rejection and how to distinguish a proper rejection from unreal, or how it's called, invalid rejection. Yes. So and I can tell, I try to explain you this like for a little child, why sometimes the rejection will work and sometimes the rejection will not work. Yes, because it doesn't depend only on the rejection. Yes, it depends on much more, and this I have already explained in this video here. Let me show you this video here. Let me show you this video here. This video here, that was how to distinguish a rejection from a market move the right way. Yes, this video, get this, watch this video, get the ebook, because here I have already discussed the major part about rejections, because here I have done clear what are the most important parts of a rejection. And the most important part is not the rejection itself, because like you cannot do a trade only based on the trend, you cannot do a trade based only on the major key level, you cannot do any trade based only on the candlestick pattern. Yes, you have to get all those things together to get a proper rejection. Yes, a proper rejection is not only a movement of some kind of price. It's more than this. So let me show you this in this candle here. This candle that tells me that we are going up. Yes, so I'm gonna do a call, because I understood on this movement here. Yes, I'm gonna do another Euro USD chart here, so I can show you this on the 5-second chart. So we have here the 5-second, and this, you see, this was the confirmation here. Yes, this all 5-second candles are telling me that we are going up, and I understood this only by the movement. So I'm gonna show you now how you can understand this. Because if you are on the street, yes, because we were here between those two lines here, you see, between the 100 EMA and the 200 EMA, and I told you already, yes, I have told you already that there's almost a fight between those EMAs, and then the market starts to consolidate. And that was the reason why this candle was telling me we got a rejection from the 100 EMA, and then we shoot up because of the rejection of this. And this rejection was nothing else than this all green candles here. Yes, this candles. I don't need to see the 5-second chart, but you can do this. You can watch this 5-second chart. But what I want to try you to explain, this window here, this 1-minute candle, yes, which I have traded, is in reality 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles. This 12 candles, yes, you cannot predict, yes, or participate, yes, the future of 12 candles only by watching one candle. This is ridiculous, and this is what so much YouTubers are not telling you. Yes, that's the same when you got looking for a 15-second confirmation to do a 5-minute trade, yes, or a 3-minute trade. The thing is, you have you cannot watch one 15-second candle and understanding from this one candle what the future will be. That is the same as if you would look be at the street, and you have a high traffic street, and you want to pass this street, and you look at this traffic for 15 seconds, and then you decide, because your street, you need 5 minutes or 3 minutes to pass the street. Then you decide if you are going to pass the street or not. Yes, and this in a speed of 3 minutes. So how high is the probability that you got hit by a car? Yes, the probability is really high. Yes, and you wouldn't do this risk. So if you look at the 5-second chart, you see one candle, and on one candle, this candle, you cannot predict that the price will go down. Yes, because this is ridiculous. It's the same as you would look 5 seconds on a street, on a high traffic street, not on an empty street, a high traffic street. Yes, and you decide then for the next 30 seconds to pass the street when to go. Yes, this is the same probability, and this is the reason why you cannot only depend and only depends only from some kind of confirmation or proper rejection, real rejection, invalid rejection. It is not that. So let me explain you this on this thing here. So we have here, I have already prepared here some stuff. So let me show you this here. So I prepared it. So we have, and I have to change it. So for this reason, get this ebook, because you have to see this video, the primary video, the first part of this video about rejections, yes, where I have explained that there needs some more stuff. So 25% is the trend, yes, 25% is the major key level, yes, 25% is the candlestick pattern, yes, which is like a street sign. It's like a traffic sign where it says, oh, we have here a 30 limit street. We have here a highway, a 100 limit speed, yes. So you can imagine what kind, or we have here, how it's called in English, I don't know, like a reversal or something, yes, a curve. You know, there is coming a curve, you have to slow down your car, yes? These are candlestick pattern. The major key level are some kind of, I don't know how it's called, a working station, yes, where they are doing workings on the street, yes, and you have to change the direction, and the rejection makes also only 25%. So all now imagine. And this is the reason why you cannot distinguish a real or proper rejection from an invalid rejection, because you are looking only for a rejection. You think you focus only on the rejection, and the rejection, like I told you, yes, is only 5 seconds, yes, a little 5-second window, which is nothing telling you about the future in general, yes, because it can tell you only that there will be something, yes, but you have to understand everything, all that stuff, yes, all this. And I want to show you now something else to make it more clearly. I will remove here all my indicators, yes, on the 5-second chart, so and on the 1 minute chart. So, and when I do that, I do remove them, yes. And I would do here on this thing, I would place some kind of something that I would hide it, yes. You could not distinguish, yes, only from some other aspect, the 5-second chart from the 1 minute chart, yes, because at the end that are all the same stuff of patterns, yes. And the thing is to distinguish to understand rejections really good, you have to understand the 1 minute chart. That means you have to understand what kind of candlesticks are happening here, yes, to understand what is a rejection, a proper rejection and not. And for this reason, I have to explain you some other stuff, which I have also already discussed in the ebook. And that is the reason why I tell you to get this damn ebook. Yes, I had not have done it. Yes, the ebook if I didn't have done it with you together. So imagine that this is a really precious, worth looking book. Yes, this ebook is important because you see how often I gonna talk again about the ebook because it's a major part that I have discussed already. So let me explain this to you. So we have this here, and you see we got here some kind of rejection, but we are here in some kind of swing. And I would do a put now, but now it's a little too late. But if this gonna get again higher, I'm gonna do a put. Okay, it doesn't go higher, but I explain you now how you have to understand this. This part here, for example, you see it would be this part here. Yes, this candlestick was going up and then it was going down again. Yes, and this was this little rejection. So now we have got a rejection here from this level, and I'm gonna do a call on the next candle if I see a rejection. Yes, I'm gonna do a call now. So because I understood the concept. Yes, this candle that has done pressure below. This candle got a rejection from the middle Bollinger Band, and that is telling me that we are going again into an uptrend. I have to adjust this Bollinger Band here because this should be the 2 and 1 deviation. So, and you see we are going again into an uptrend. Yes, and that was the reason. And the rejection, yes, was some kind of here. Yes, I don't know, something like here. Yes. Because I understood that here was some kind of consolidation, and only this candle here, yes, wouldn't have told me that. Yes, I have understood the concept, and this is and all the context of this candle. So to explain you this here in this matter, why I'm telling you this. I'm telling you this because we have here some kind of support level or resistance level or any kind of candlestick. Yes, because I told you in this other on the other sheets here. Let me show you this sheets. Yes, where to get. For example, here we have the double top and the double bottom. We have here the rejections. You see rejection. Yes, I'm expecting here a rejection. Why I do expect a rejection? Because we have here some kind of major key level, and this major key level could be also only some kind of candlestick. Yes, because like I told you in the video about the dojis, that every doji is support and resistance. The wicks of the doji are support and resistance. The wicks of a hammer are support and resistance. At the end of the wicks, you have support and resistance. That's the reason why there is a wick. A wick is a sign of support and resistance. So if you see this here, for example, on a 1 minute chart, yes, you see it's a double top. Yes, so on the 1 minute chart, yes, because it's some kind of let me show you this on when I put it away. I think I have explained to you that the 5-second chart looks like the 1 minute chart, and the 1 minute chart looks like the 1 hour chart, and the 1 hour chart looks like the 1 day chart. And if you would know how the times were should be, yes, you would understand if it is a 1 minute chart or the 5-second chart. So a proper rejection, yes, because mostly of you don't understand that a rejection is not that what you understand under a rejection. So I'm gonna explain you this with the arrows, yes, because I think this is the easiest way to explain you. I try to explain you. It's like for a six-year-old boy or girl. So let me show you this in this manner. So we have this support and resistance level. This is a horizontal. But you have to imagine that you have EMAs, which are also dynamic support and resistance level. And you have trend lines, they are diagonal, yes. And you have Fibonacci levels, and you have Bollinger Bands, yes, everything. But they are curved. but at the end there are all support and resistance. And now I'm going to show you how you can distinguish a good rejection from a bad rejection, and only from the move. The first thing is, before you look for a rejection, yes, before you look at this part of rejection, yes, let me remove this. Before you look for this part of rejection, and this is what a lot of people are not telling you when they are talking about the rejection. Before you look at this, yes, on the rejection, you have first of all to look for all the other stuff, yes, because the rejection alone, you're gonna fail. If you got a candlestick pattern, like I told you, you're gonna fail, yes? If you're gonna look only for the major key level, you're gonna fail, yes? Because the major key level is nothing worse if you don't have a rejection, yes? Or and the candlestick pattern is nothing worse if you have not a major key level. And the trend alone, yes, is not telling you if there is a retracement or not, yes. So at the end, you have to look first of all before, because the rejection is the last thing. First you look for the trend, then you look for the major key level, then you look for the candlestick pattern, yes, and then after that you look at the rejection. So you cannot say there is an invalid rejection or a proper rejection. It's only you that you don't have understood that the rejection is only a little part of all. So, and now we are going to talk. If you have problems distinguish a good rejection from a bad rejection, you have to, you can look at the 5-second chart, yes, on a split screen or something, yes, to understand how it's going. But I would not recommend to you to look at the 5-second chart because you are going to focus only on the candlestick patterns, on the candlesticks. Yes, and the problem the candlestick is, like I told you, if you have only 5 seconds to decide if you have to go to cross the street or not, and then you have 30 seconds or more to pass the street, you're gonna hit by a car. Yes, because you cannot predict of 5 seconds alone. Yes, of 5 seconds alone if you can pass the street or not. So, but if you can look, for example, the last few candlesticks, yes, for example, you look for 1 minute the street, yes, and you see how much cars are passing by, and you see how fast they are passing by, yes, and all that stuff. Your prediction of passing the street without getting hit by a car will be much better, yes. So this is the concept behind this. So I'm gonna explain you now, because why I have shown you so much different, or why I tried to explain you that the 1 minute chart is looking like the 5-second chart, and the 5-second chart is looking like the line chart, yes, or because they are all based on the same thing, yes, and the 1 minute chart looks like a 2 minute chart, and the 2 minute chart looks like a 5 minute chart, yes. If there wouldn't be indicators, they would look all the same, yes. So why? Because if you get, for example, a rejection, and this is what the most people of you, most trader, don't understand. You have this kind of support and resistance level, yes, major key level, and this you see that the price is coming from here, yes. So I make an arrow like this, yes, price is coming from here, and then it goes down, yes, it goes down a little bit, you know, there are always such forms. So, and then we are going to hit the support and resistance level, and not only we gonna hit this support and resistance level, yes, we are going to cross it, yes, and this is most of the time, yes. So we're gonna hit this, yes, and this was mostly of the people understand like rejection, yes. They understand this movement here, yes, as rejection, because they see a fast movement. Or let me do this in some kind of other way. We can expect, for example, this would be some kind of doji here, yes. So we're going up, I will draw now some kind of doji here, so it's more realistic, because else I think you don't understand this. So we are going down here, yes, it's going this way, yes, and then we are going up again, yes, so we have here some kind of doji, yes, and then we will apply this line here more on this level. So we have the doji on the support and near the support and resistance level. Let me see this in this manner. So we have here a doji, yes, we have here a doji, and now after this doji we are expecting some movement. So okay, let me show you what I want to show you in this, because this is a thing that you have to understand here, yes. So after we are coming in this manner, yes, I can draw also here some kind of lines, so we can I can show you the candlesticks, yes. I will do it in this manner. Let me get this, not the text. I need shapes. I need shapes, yes. For example, this is the opening price. This, okay, let me remove this. Shapes, rectangles. So we have here, this one is a green one. So let me draw them. So then we get another shape, another rectangle. This one here is a red one, yes, and so on, yes, because it's going down. And then we have another green one. Okay, so I think you understood this. So imagine that this all would be this kind of, yes, this kind of candlesticks, yes. And here, because we got here two candlesticks together, that would be some kind of doji here, yes. So at the end, because you see here, we have here 2 wicks. Yes, I have to draw them. Maybe here we have a wick, yes. And we have here the cross. Okay, so here's a cross, because the opening price of this candle was the same like the closing price, so we have a doji here, yes. Let me draw this a little bit bigger. So 3, and here also 3. And this is the reason why I can recommend you only to get the ebook, because there is also a link in this ebook to the candlestick math. This is candlestick math, yes, and this makes it more visually to you. So at the end, you expect now. What do you expect now? We have an uptrend, yes, we have an uptrend, and then we are got to hit the support and resistance level, and now the price is here. This was the doji, yes, till here. It's going to till here, from here to here. This is the doji, yes, and now after the doji, the price is going to do this. And now I'm going to explain you an important part. So now after on the next candle, yes, we wait. This is also important. Watch the video about the purchase time and expiry time. On the next candle, we have 25 seconds to decide what is going to happen after our trade, yes. So if we get this movement now on the next candle, yes, for example, we get this movement here, yes. So most of you would do a call now, yes, because they think this would be a rejection, yes, from this level here, and they would do a call. But this is wrong. Why? Because if you imagine that this would be now a 5-second candlestick, yes, this would be a 5-second candlestick. What could be happening would be on the next 5 seconds, it could be go down, yes, and you would already entered here, yes. Let me see. You see the 5 second, and you would enter here at this level, yes. So. And then it goes in the next 5 seconds, it's going down, yes, like this, for example, yes. So it's going down. Then on the next 5 seconds, it goes down again, yes, a little bit more down. It's a little bit difficult to draw here. So it's going down again, like this, yes. Then it's going down. Then it's going, going up, yes. Yes, it's going up. So in this manner, then it's going down again. So we have already 10 seconds. There's a 5, 5, 10, 15, 20, yes. So, and here, and you entered already on this movement, yes, then you now would understand that what we have here is nothing else, yes, than with the neckline here, a double top, yes. And what does this mean? It was all this time was above this support and resistance level, but after a double top, yes, it's going down then, yes, and then in the last 30 seconds it will go OTM, yes, out of the money, and it was all the time above it, yes, because it was doing a double top, yes, on the 5-second chart, yes, and I can show you this here to demonstrate it a little bit clearer. Here you have it, yes, the double top, yes. You have here double top on the 5-second chart. This could be a 5-second chart. You see this, tack, 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 and then it goes down, yes. And you have misinterpreted, yes. You have not understand that this first movement was not a rejection. This was only the first top of a double top. So, and this is important. And the same can be, yes, with it, for example, head and shoulders, yes. You get a head and shoulders, and you have to imagine that such movement, because they appear on the 1-minute chart, they will appear also on the 5-second chart, and all this, yes. So you have to understand from the movement of this 5-second candlesticks, yes, and the movement of how the candlestick will be, because how they will be developed, how they will create it, the movement of that. And this is what you have to understand, because if a candlestick only breaks through this level here, such in this manner, yes, it can be that at the end there will happening on the 5-second chart, and this is what you have to understand, yes, something like this, yes, and you have mostly you see only a part of this, yes, because you have only 12 seconds, yes. But if you have something like this, for example, yes, you know, okay, this is a head and shoulders pattern, yes, on the 5-second chart, and then you know that this one, and at every point where you should enter here, yes, at every point where you should enter here or here, yes, or here, every point of this would be a loss, yes. You would lose, because at the end, because you have another 30 seconds after this, yes, would be a loss, because you entered on the head and shoulders pattern, and after a head and shoulder, it's going down in this manner, yes. It's going down like crazy, and this is the reason why you often get out of the money on the last second, because you didn't understood. Yes, you didn't understood that there was a head and shoulders pattern, or double top or double bottom, yes, on the 5-second chart. So if you want to get sure, you can wait for such patterns, yes, double top, and also on the 5-second chart, because they will occur on the 5-second chart much oftener, more often. For example, here, this is a double top here on the 5-second chart. Yes, only 1, 2, 3, 4 minutes ago. Let me see here, 4 minutes ago. 1, 2, 3, 4 here. Double top here. Yes, here was a double top. This double top, 1, 2, 3, 4 minutes ago. This double top here was this one here. Yes, this here, and you see this was a confirmation. Yes, of this. This pattern here, yes, so easy it is. So I think I have talked a lot. I hope you understood the concept that a rejection is not only a movement in some direction, it's much more than this. That is understanding the understanding almost the most important part is the major trend, the strong support and resistance level, the major key levels, yes, the candlestick pattern, which confirms the expectation, because there are like, I would say, the trend is the traffic of the street, yes, traffic the traffic, what is happening, how much cars are passing by, in what direction are the cars are passing by. Yes, the support and resistance are I don't know how they're called in English, but that are some kind of let me look if I can find it. Redirections, I would say the support and resistance levels are redirections, something like redirections, yes. Redirections, yes. Redirections. Obviously, on the street, you can believe them 100% because there are institutions which keep care about this, yes. But on the, you have to understand that these are only things which you understand now, but at the end, what happens is something else. And these are here, if you are talking in the same paragonations like traffic signs, yes, traffic signs like limit, speed limit, and so on, which help you to understand what price, who is the movement, yes, is doing, yes. And the rejection, I don't know what could be the rejection, what could be the rejections. Could, I don't know how I can tell it in correlation to this. I don't know, but maybe you don't know, you know it, and so you can tell me this in the comments. So this was a double top here, yes, and you have to understand this patterns. And if you can read the 1 minute chart, good. You are able to read also the 5 second chart, yes. And if you are able to read the 5 second chart, you understand at the end the rejection imperfection, yes. Head and shoulders, yes. So this is what I hope that you understood this better. The most important part on this, what I have told you now, is that you cannot rely only on the rejection. The rejection is only one part of the complete trade, and the last part, yes. The rejection is only that thing what confirms you what those other three parts are telling you. And that is so important that you get the knowledge about all that candlestick pattern which I have explained in the ebook, yes, and in the videos, and that you understand major key levels, that there are always and overall at any place support and resistance levels, trend lines, Fibonacci levels, and those, yes, and also the trend. You have to understand the trend to distinguish an uptrend from a downtrend, from a flat, yes, from a ranging. That are things that also a 6-year-old boy or girl can do this, yes. You can only say, what do you see more? Do you see more green candles, or do you see more red candles in this time interval, yes? And if you see more green candles, you are almost in an uptrend. And if you see more red candle, you are in a downtrend. A little child can distinguish it, yes? Then the major key level are those levels where price reversed, yes? Where already price has reacted. That is because market repeats itself. And then the candlestick pattern, those which I have explained here in this ebook. Yes, this is the reason. Get this ebook. Yes, and these candlesticks are like traffic signs. They are telling you, okay, there can be now a reversal. Stop. There was some accident, yes, but there will be a continuation. And the rejection is the ultimate part, yes, which gives you another 25% of a favor in odds on your favor, yes, only because you see, there are coming buyers into, yes, there are coming sellers into, but they can be tricky like this one, yes, because here you could think, okay, they are coming buyers. Yes, but at the end, this was only the last attempt of the buyer because because you know this pattern. I have discussed this pattern. Yes, I have already discussed this pattern. Yes, and this could if you get this information and you are too impatient, yes, you hesitate and you don't wait for the to understand, to enter too early, you got out of the money, you're gonna lose because of this pattern here, double top and head and shoulders, and other candlestick pattern, chart pattern will occur on the 5-second chart. And so often, let me see, here you will see so often such patterns. For example, here we have another double top here, yes, here this is another top, double top, let me see, 2, 4, 6, 8, 10, 12, this is 1 minute, 2 minutes, here 2.5 minutes ago, let me see, 1, 2.5 minutes ago, this rejection here was a double top here, yes, and on the 5-second chart you could see this, yes, this was a double top here, yes, based here on some maybe on some EMA, yes, because it's not horizontal, yes, it's more in this manner. So this is what you have to understand here, trend line. So this was the neckline of this double top, yes, and this is what you have to understand, that this is the most important part, that the rejection is not only a movement, it's an understanding of the whole context of all candlesticks, and then you can apply the rejection after you have accomplished the other parts. Yes, the other parts here, the trend, the support, the candlestick pattern, and then at least there comes the rejection. Because it cannot be the rejection the reason why you have lost, yes, because if you only depend from rejection, you're gonna lose, yes, because you have only 25% of all that things which you can get together to get your odds on your favor, yes. Also, if you get all those, yes, because it's 25% would tell you that you would win 100%, but I would say 20, 20, 20, 20, yes, and the last 20% are always random, yes. That's a reason why when I talk about strategies, I'm gonna tell you 90% winning strategy, 100% winning strategy. If you hear something like this is the greatest scam, yes. 100% winning strategy is scam. 90% winning strategy could be sometimes 90%, yes, but how they try to sell it, yes, it's a scam, yes, because at the end you know what is necessary, yes, to get your odds on the favor and to do 80%. You need those things, and the mostly those who telling you some strategies are not even mentioning this. They are mentioning only indicators, yes, and telling you you have to do this, and then you do this. This is such a scam, yes. Don't believe those. Yes, they want only your affiliate. So I would say that was enough. The video was it's got long. I hope you understood the concept about the rejections. And what you have to be carefully about, yes, that the first movement is not always a rejection. Often people don't understand this, yes. Also, if this is going some kind other, yes. Also, if this you have to imagine that this can be also created, yes, some kind like this, yes. This is only in ideal form, yes, that we are all the time above, yes, but it could be also something like this, yes, and often it is so, because why after a doji comes up something near a doji, yes, often because price is trying to fool you and to trick you, yes, and it looks like it will be go up or it will go be down, yes, then you go here into a put, yes, but at the end it will not be a double top, it will be a double bottom, and this arrow, yeah, is going to hit this, and then you have a double top, yeah, a double bottom. So easy is it, yes, and this is what you have to be carefully about, yes, to understand the context, yes, because at the end it will be a double bottom, and you see it will only one candle, yes, or 1 5-second candle to change a double bottom or a double top to a double bottom, yes. This is the tricky part, yes, and this is why you're gonna fail then. You have to understand that you have to be patient, to wait to get confirmations before you enter into a trade. When I do this, yes, I have experience. It's something else. It looks some kind easier, yes. It looks like, oh, how can we do it so easy, yes? But this is all the kind of experience, and you don't have this experience, yes. You have to collect screen time. You have to watch a lot of candlestick movements. You have to observe candlesticks movements, yes, and then you understand if this candlestick are going to break the support and resistance level or not, or get a reversal there. That I cannot teach you in a way video. You have to watch all my videos, yes, to have to all my videos to understand, because this is all I am telling you in my videos. Experience about 2 years of binary option trading, and don't expect that you know all that stuff what I know only by watching a few videos. You have to watch all my videos, because then you have the overview and you understand what you need to know. I can give you only the path, yes, the path to reach this level, yes, but the way you have to go on your own. You have to get in this pitfalls, which I have explained in my discipline part, yes. You have to be trapped here in this pitfalls here, which I have explained in the discipline part, yes. Here, this pitfalls, you have to pit there, and then it decides if you are going back, yes, and practice again, or you have to, or you leave, yes, because this is also a question of determination. If you want to reach this goal, yes, you have to put effort into this. It's not only watching videos, it is hard work. It's hard work because you have to get against yourself, because practicing is some kind of boring, because it's, for some people it's wasting time, yes, and so but you have to practice, because you have to understand how market movements goes, and then you and if you understand that the 5-second chart is nothing else than a 1-minute chart, and the 1-minute chart is nothing else than the 10-minute chart, for example, you understand how candlestick movement is, what how market movement is, yes, how but what bio market feedback is, yes. This is bio market feedback, yes, bio feedback of the market. This is what market is telling you. We are going up or we're going down, depending from the movement of the 5-second candles, yes, or line chart. This is a line chart here. This looks like a line chart, yes. It's all the same. So you have to understand this, that if you because when I tell the people look at the 5-second chart, they don't know what for looking for, yes. Because you have to see to get the expiry time of 1 minute, a good prediction, you need to analyze the 1-minute candles. You cannot analyze 5-second candlesticks, yes, to make 1-minute trades. You can, if there would be a 5-second option, yes, you could do 5-second analysis to do 5-second trades, yes. But there is this not. There is only, and if you do 5-minute trades, you should analyze 5-minute candlesticks, yes, and a 15-second confirmation is ridiculous, because at the end it could help, yes, it could help if the candlestick is clear. It can help, yes, and but I say longer the time span, yes, longer the time interval, more bad is the prediction of it, only because you look at the 15-second candlestick, yes, to predict the next 3 minutes. That is ridiculous. That is, if you look at the 5-second candlestick to predict the last 30 seconds, is the same ridiculous, yes. But if you look between 10 and 20, yes, or 25 seconds, yes, of candlesticks, to predict 30 seconds only, because at the end that are only remaining 30 seconds, it's much more realistic, yes, and much more, the probability is much better than predicting on 15 seconds, yes, the 3 minutes, yes. Or you should look at almost 1 minute or 2 minutes to predict the next 2 minutes, yes. This is the ratio. So If you like this video, do a like, yes, and don't forget to like, because I think a lot of people are forgetting to like, yes. Like my videos, yes. So show me that you like my videos. Do comment, yes, and show me that you like my videos. And if all obviously only if you like them, yes, and subscribe to my videos and to my channel to support me. And I would say stay safe and bye bye.